Hello everybody, it's the Trading Pug here. I'm just apparently a pug who trades stocks. So in this video I'm going to do a recap of the stock market this past week. This week was very exciting. It's probably one of the biggest 1 week drop this decade. And actually this drop is what sparked me to start this YouTube channel and make this first video. Because believe it or not, I saw the crash. I saw it coming, and I sold everything before the crash. And of course, nobody's going to believe me now, because I'm saying it after the fact. And so to redeem myself, I thought I would make this video. And I'll talk about what caused the crash, why was the crash so big, and what to expect in the following weeks. Now, this is my very first video, so if you enjoy it, please do hit that like and subscribe button. Alright, so let's get started. So what caused the crash? Some people say it was the coronavirus. Was it the coronavirus? Well, the answer, I think, is a big fat no. Okay, a flu is not going to ruin the world's economy. So now let's look at the S&P 500. Here we have the daily chart of the S&P 500. And actually, if you look at the chart, here is where the coronavirus news initially got out. And this stirred panic and fear in the market. And it caused the market to drop a bit. Okay, drop to this level. Now, this was in late January. And what happened here? That's when casinos in Macau, they closed down for 2 weeks. And then we had passengers of cruises and flights, they got infected. And we had some flight companies that were canceling their flights to China and other places. And that's what caused the drop, and this is actually very typical of a virus outbreak. This is not the first time this has happened, and it won't be the last. In fact, if you look at endemics in history, they occur every few years. We had like the mad cow, and then we had bird flu, then SARS, and then Ebola. And yes, these do generally cause the market to drop, but it's not a full-on crash. And I'll do another video explaining what happens during epidemics. I'll do that later. But anyways, this is what happened in the week of January, late January. But after that, we see, after this dip, it quickly rebounded. It shot past this record high. Right? It's very powerful buying pressure. And so I just want to make it clear that no, it's not coronavirus that's causing the crash. The coronavirus happened here. Okay? It's not causing the crash here in late February. So what is causing the crash? Well, it's this. The market was very, very overextended. If you look back from like October or even earlier, you can see it's just a straight curve up. Okay, it's forming what people might even call a parabolic or an exponential curve. And you can see, well, there has been some minor dips, like over here, and then, over here, but nothing major. There's no major pullbacks. And, after these dips, it just kept rallying and rallying. So the buying was really incredible. And, when you see something like this, common sense will tell you, this can't go on forever, okay? This is very unsustainable, and eventually, it's going to have to give it back. So when will it give it back? Well, pretend this didn't happen yet. Will it give it back here? Possibly, because this is very overextended. Will it give it back here? Probably. Here or here? Like, nobody knows. Right? You can't predict it. So what should you do when you see this kind of straight curve up? Well, you really do need to set your stop loss very close to the price. Okay? It's much better to be stopped out on a small profit or a small loss than get destroyed by a crash. So in hindsight, what you should have done is this. You should have trailed your stop loss very close to the price. Okay, so when it hits it, You get stopped out maybe for a profit, but at the most a small loss. Same with here. Trail your stop loss very close to the price, and actually the market is very forgiving. Okay, so like over here we can see we had a few days where you were given the chance to get out before this huge crash. And so always remember, when you see such a powerful straight curve up, like a parabolic almost, always trail your stop loss very close to the price. So you'll get stopped out in time and you won't endure a huge gap for a bigger loss. Does that make sense? Let me repeat. You should always trail your stop loss close when you see a parabolic move like this, because once the market turns, it can be a disaster. Okay, so the crash happened because the market was extremely overextended. Okay, and so now I'll explain why was the crash so powerful. Why is it just a straight drop down with no signs of buying, no rebounds? It's just a vertical drop. This is because previously during this parabolic move up, okay, there wasn't any main concentration of buyers. Maybe there were some buyers here that acts as support, maybe some here. But this is such a long curve up. There could be buyers anywhere, right? There could be people bought here, here or here or here, anywhere along this line. That's why it kept moving up. If there were no buyers or buying pressure, it wouldn't be a steady line up, right? It would kind of curve sideways for a bit, consolidate basically, until there were more buyers. So near the top over here, that's when buyers kind of got saturated. Everyone who wanted to buy has already bought. So when it crashed down here, there were no buyers left to buy the drop. That's why the drop is such a vertical drop, okay? And additionally, oftentimes, those who buy, if they're holding a profit and then the market drops, they want to sell to break even, okay? So if you bought here, okay, you're profiting, and when it drops here, you want to exit your position here, generally. Okay, and if you bought here, you want to exit here. If you bought here, you want to exit here to break even. And because there were buyers along all of this line, there weren't any very concentrated amount of buyers anywhere. The selling is also very spread out. People would sell here. If you bought here, you would sell here. If you bought here, you would sell here. So it's just constant selling. And that also explains why it's such a steep drop and why there aren't any rebounds. Okay? And now the third reason is during the parabolic, right? This is such an awesome bullish market. There aren't that many people looking to sell short. Okay, there were very few shorters who had the guts to short during such a rally. So now what do shorters do? Well, once you short something, you need to cover your position eventually by buying, right? So when this crash happened, right here, there weren't that many shorters because they wouldn't risk buying along this bull market, right? So there weren't any shorters here. So when this did crash, there were very few shorters that needed to cover their positions or basically buy back the stock. This again explains why there's almost no buying in this crash, and it's just a crazy steep vertical drop. Okay? Alright, now the last thing I want to talk about is how to proceed in the following weeks. And I'll be honest, I don't know what will happen at this stage in the future. Okay, nobody knows. Maybe next week will be more certain, but right now, this Friday, nobody knows. If they claim they know, the chances are they're just taking a wild guess. Now, my best advice is just to stay on the sidelines until the probabilities are in your favor. If you look at the crash, right, it broke past multiple peaks and troughs on the chart. Now, what I tell my clients is these areas of support and resistance, they're not just lines on the chart. Okay, think of them as like magnetic zones, and prices tend to gravitate towards these magnetic zones. And I'll explain more about this in a later video. But notice how the crash, it broke past all of these areas of support and resistance. Broke past all of them. And now we are down here. So what makes you think it won't break past this? What I tell my students is, never enter a trade unless it's a 90-10 probability, or at the bare minimum an 80-20. Okay, so you got to think, what are the chances this will rebound up? What are the chances it will continue further down? It's definitely not 90-10. Okay, so I would advise for now just stay on the sidelines and wait like a tiger, stalking a dying gazelle or something. Wait for the high probability moment to appear before you take action. And yeah, that's it for this week's recap. If you enjoy it, this is my first video, so please do like and subscribe. And stay tuned for more content coming soon.